Welcome to Earnings Central. In this video, we'll break down Netflix's third quarter 2024 earnings call in under 5 minutes. We'll cover the key financials and major takeaways, so you can stay informed without spending hours listening to the full call. Let's get started. First up, the financials. Netflix is projecting revenue of $43 to $44 billion for 2025, representing growth of 11 to 13% year over year. They're expecting to add $4 to $5 billion in incremental revenue. The company highlighted that the majority of this growth will come from membership increases, driven by their strong content slate and improved conversion of consumer demand. Their advertising business is showing promising growth, with ad tier signups accounting for over 50% of new subscriptions in markets where ads are available. The ad tier membership base grew by 35% quarter over quarter. While advertising won't be a primary revenue driver in 2025, Netflix expects ad revenue to double year over year, albeit from a relatively small base. Looking at regional performance, Latin America saw a slight membership decline in Q3, primarily due to recent price changes in major markets. However, they're already seeing a rebound in Q4. Revenue in the region was up 9% year over year, maintaining consistent growth despite currency headwinds. On the content front, Netflix acknowledged some disruption from the Hollywood strikes in early 2024, particularly affecting their US and Canada slate. However, they're getting back to a more normalized schedule. Major titles like Bridgerton made it to the first half of the year, while others like Cobra Kai, Emily in Paris, and Outer Banks were delayed to late Q3. Looking ahead to 2025, Netflix has an impressive lineup, including new seasons of Wednesday, Squid Games, and Stranger Things. They're also expanding into live programming with the Tyson Paul fight, NFL games on Christmas Day, and a 52-week WWE partnership starting in January. The company maintains a strong position on their talent compensation model. They're sticking with their upfront payment structure, believing it helps attract top talent and allows creators to focus on making the best possible content rather than cutting costs. Regarding pricing strategy, Netflix continues to evaluate markets for potential increases based on the value they're delivering to members. Recent price increases in European markets and Japan have performed in line with expectations, and they've announced new increases in Spain and Italy. Their game plan for competing with platforms like YouTube focuses on premium content. While both services compete for viewers' time, Netflix sees their strength in high-quality storytelling and ability to fund ambitious projects. They view their subscription model as generating better returns for creators compared to ad-supported platforms. On the topic of bundling with other streaming services, Netflix leadership emphasized their focus on adding value to their standalone offering rather than pursuing bundles like some competitors. They're concentrating on expanding their content library and building new capabilities in areas like advertising, gaming, and live events. Looking at engagement, Netflix maintains about 2 hours of viewing per day per member, with total hours up roughly 1% in the first half of the year. While live programming won't dramatically impact their approximately 200 billion annual viewing hours, they see it as adding high-value entertainment moments that gather global audiences. The key message from this earnings call is clear. Netflix is focusing on steady, sustainable growth through content investment, strategic pricing, and careful expansion into new areas like advertising and live programming. They're maintaining their position as a premium entertainment destination while building new revenue streams for the future. That wraps up our recap of Netflix's third quarter 2024 earnings call. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way. From Earnings Central,